All right, episode 202. Today we are talking about the real estate investment strategy that agents need to know right now. And we're going to get started right now. All right, welcome back. Episode 202. We are talking investment game today. This is the investment strategy that agents need to know about right now. But what you need to know about right now, love the segues. I'm crushing it. Screw you, Nick. I'm the best host around. Mortgage Mike. Go to mmgloans.com. That is Mortgage Michael DeBacker of Texas. Friend of the show, fantastic lender, the best lender in all of Texas and Oklahoma. If you are looking to get more deals done, get your buyers approved that maybe your other lender couldn't get done, he has all sort of creative ways to get your buyers and clients into a home. So check out mmgloans.com and check out Mortgage Mike. Then when you're done with that, and you need a home warranty for your new buyers because you just got them under contract, congratulations, call Theron Smith at Armadillo Home Warranty. Ask them about their one-page contract. You get you to use your own contractors. I know that they're a sponsor of the show and they're our friends, but they are by far the best home warranty company. I would say that even if they weren't a sponsor of this show, just for their flexibility and their customer service is incredible. So check out armadillo.one/tour, TORE, and get that one-page contract home warranty, that hard shell protection for your clients. Whew, let's just say that the clients you just closed, that was an investment property. You need to check out HomewardDFW.com, the home of Homeward Property Management, North Texas' premier property management company run by the lovely Dana Wynn. She is absolutely crushing it right now, and appreciate all the referrals you guys have sent us over the years. The company has been growing like crazy, but we're still providing that white glove service for our clients. So check out HomewardDFW.com. Contact us for all your property management needs. And then, when you're ready to start your podcast of your own, check out torestudios.com, TORE studios.com. You can look just like this, except your head won't be so shiny because you forgot to use the little Dapper Pads today before the show. So you just do it live. But Jesse normally warns you about that before you go on the show. Check out Tore Studios, TORE studios.com. And make a great podcast. We'll probably edit that part out. Whoo!
Nice.
We probably
take
won't.
a breath.
End of the show. Wow, that's all I had in me today. We are, man, I am super excited about today's show. I'm so excited I kicked the other two hosts off. I was like, guys, take a week off. I got some guests I want to talk to. And one, we got Tom Diesel back, which I'm super excited about. Friend of the show. Always fun to have him on, whether he's talking investing, taxes, or just BSing around. But I'm very excited to have Mr. Eddie Speed on the show today. So Eddie is a real estate investor, author, one of the most highly sought after real estate investment consultants and speakers nationwide. He is the founder and owner of Note School and has been investing in notes for 40 years, has done over 50,000 transactions worth over $500 million. And Note School has served more than 10,000 students in the world of note investing, including KW's own Brett Tanner, the owner or the founder of KW Wealth, who's a member of Note School. So just an unbelievable following and community that Eddie has built. And I am super excited to have Eddie on the show today to talk about basically, I wouldn't call it a hidden investment strategy, but probably the most premier investment strategy that agents are overlooking right now that I think that they can capitalize on to start and continue their wealth building journey. So Eddie, welcome.
Thank you.
So nice to have you.
Yes, sir.
Always start with backgrounds. I can't just read a bio. We got to know who Eddie Speed is. So give us the story. Who is Eddie? What do we need to know?
Well, I started buying discounted notes in 1980. So I call this my sixth real estate cycle, right?
Oh, man.
And started in one. And so I stumbled into the business, was taught by a couple of guys. One of them turned out to be my father-in-law.
Oh, nice.
And so we've been in the space now for all this time. And, it's just been a journey. I've helped real estate investors. Right now, we have a big target market where I say high-earning realtors or dentists or anybody that would have maybe 2 years ago just been buying a rental property or possibly investing in multifamily syndications. What's their next horizon? And what business has gotten good because other things have gotten not so good? And I happen to be in a business that's gotten a lot better.
Yeah. So when you say, we'll just take it back so everybody can just get a real deep understanding of what we're talking about today. When you say investing in notes, I'm 5. I look really old. No, for my age. Explain a note investing for me in 30 seconds, just like I have no idea what it is.
All right. Well, here's a great example. A seller finance note is a note. It is a note payable over time with interest, secured by real estate, and those loans are typically bought at a discount. So if you create a $100,000 note, you might pay, $80,000 and buy the note. And I've bought 50,000 transactions like that.
Whoo, 50,000 times, whatever that looks like.
That's why I look so old, man.
Yes, Eddie's 24 years old. So dive a little deeper for me, right? So let's just say how does a note deal sort of come to fruition, right? You have a homeowner, obviously, at the end of the transaction, right? Yeah. And then you have a note buyer. I assume you have a servicer in the middle. At some point, you had a bank involved, who was financing that mortgage on the home in the first place. How does it all come together?
Well, that's one of the first questions people ask is like, okay, how do I find a note? Well, 20-something years of note school, we've built a lot of services where we help people with that process. Because what we want them to do is get their time back, right? Everybody wants, if you can own 1,000 notes for the same time effort it takes to own 100 rentals, then that means it takes a lot less time, right? So the one thing is finding a note, basically doing the due diligence. How do you do that? And of course, people say, well, what does note school do? We teach people that. Mm-hmm. And then then they get to decide how much they want us to help them with.
Yeah.
Maybe they want us to do a lot of it with them, and maybe they want to do a lot. And there's also some really cool financial modeling techniques that obviously we'll talk about. Sure. Like, what do I do when I run out of money?
Right.
And there's ways that you can go recoup your investment and then can do it again. And so those are the kind of things that, notes really matter. And one other thing right now, and I think a lot of your audience, even though they're very sophisticated realtors, there's 2 million, according to Black Knight, there's 2 million residential mortgages that are in default. And here's the thing, here's another lean your head back thing. So mortgage delinquent notes are categorized into the level of delinquency. There's 1 to 30, there's 30 to 60 days, we all know how it works, right? Loans that are classified in the 120-day plus delinquent bucket are more than 600 days delinquent. And that's according, by the way, to my friend that runs the data for auction.com.
So you're saying, and that's wow. So it's like the heavyweight division. There's no upper limit, right? Yeah. If it's 120 days plus, you have no idea how delinquent it is. And they're saying on average around 600 days.
And so those loans are waterfalling into getting sold in the market. Typically, the banks are not taking them to foreclosure. They may initiate a foreclosure and then they're moving them into a system and a process. You and I have some mutual friends that do that at a very big scale.
Yes.
Right. And I've been in the space a long time, so we're fairly connected with knowing how to find that kind of inventory. So there's not only performing notes, but there's non-performing notes, and people think, well, there's none of that today. Well, let me tell you something. There's 2 million residential mortgages that aren't making a payment.
Where do you think? Just so I mean, realtors obviously are the on the front lines of what their seller prospects and clients are going through. and I think they're probably starting to witness some of these things. Where do you think 2 million defaults is coming from? Is that just the increase in property taxes not keeping up with, everybody who bought thought appreciation was going to be 15% a year forever? Is it, where do you think that's coming from?
There are some legacy loans, meaning they were loans that were delinquent before the virus, and then they couldn't foreclose because of all the moratoriums. So there's some of that, right? The loans that have been traded in the last couple of years have pretty much been legacy loans. But there were 8 million loans that got delinquent during the virus, and a lot of them they cured and got a modification and everything's all good. Well, what happens with the ones that didn't? Well, that's these.
Yeah, I mean, I think that's one of the hidden things that a lot of people aren't really taking into consideration. Is it seemed, like the whole world just went back to some semblance of normal a year and a half, 2 years after the pandemic. But there's a lot of these loans that never got caught up again, that never got current again, that people never got their jobs back as well.
Yeah, and they've really, that's why they're so delinquent, is the mortgage lenders, and obviously the regulatory environment has been very stringent in trying to modify them, trying to do everything they can. And as an old dog like me in the business says, these are the loans that aren't going to fix.
Yeah.
There's always some percentage of loans that get delinquent and they can fix, and hoorah, they did.
Right.
But what happens when they can't?
Well, and that's why I want to dive way deeper into what that looks like, because here's the thing. You always want the loan to get cured if you can. You don't want anybody to lose their house or anything like that. That's why I think that note investors play such a key role in as a service provider, really, because I think that they fill a gap that banks can't.
I do.
Right? And that's huge. And so as an investor, what is you have 20 notes now, right?
Yeah.
What did getting into the first note investment look like for you, from an education standpoint and what you learned, but also as an investor, what were you looking to get out of it?
Well, and as I've told my story that several times, I'm one of those folks who had money sitting on the sideline. It was scared money. Been involved in a lot of different real estate transactions. I think we talked a little bit about this on episode 178 or so. But
y'all can remember episode numbers just so much better than I can.
Anyway, it was traumatic.
Okay.
But anyway, I was looking for a place I could put my money where I could sleep at night. And we've talked extensively. You raise capital for syndications. You've been involved in the rental business. We all have, as a family, as individuals, and it's tough out there. And I'm approaching the age where, in fact, believe it or not, I'm older than Eddie by a few months. But folks of our age, we've seen it all. We've been in cycles. Okay, so naturally, I can look at what's the worst that can happen. The worst that can happen is pretty poor. I want to sleep at night. So when I came across Note School, I came across Eddie on another provider's podcast as I was looking for cash flow solutions. I said, well, this is certainly worth looking into. The cost of entry isn't much, and I was looking for proof of concept. And very simply, note investing is becoming the bank versus being the landlord. It's much simpler. So I bought some debt at a discount it has some built-in equity in that deal. And I have cash flow. And it's cash flow I don't worry about.
Right.
And so the concept worked. I said, I'm going to dive in more, learn more about it. And I've got 19 performing notes, so one non-performing that I bought on purpose, which we can talk about later.
Sure.
But I set a cash flow goal for 3 years. From 2 years ago, I set it for 3 years, which is I retire in a year, and I've already hit that. And it's money that comes in when I sleep at night. I think it was Warren Buffett who said, if you don't know how to make money while you're sleeping, you're going to work till you die.
Yeah.
And I didn't want to be that guy. So it's been everything I've wanted it to be. But it's very simple. You make a one-time transaction, and it pays you over time, 20 years, 30 years. And I think it's really incredible. You talked about the ability to help people. And along the way, these aren't all 780 FICO score, 20% down folks. These are folks who got maybe 10% down, had some struggles. Self-employed people, 10 borrowers. And that's fine. Every once in a while, they'll come across some difficulties. I've got one note. It's in Florida. It's an older woman. Her husband died. There's a second note that I bought. And going through the servicing notes, and by the way, if we don't talk about that, when you have property management like Homeward Property Management, you should have it for your notes. I don't collect the payments. It goes to my servicer. Right. They just send me the check. But anyway, I was going through the servicer's notes and I saw that Wells Fargo was starting foreclosure. I did a little bit of a dig and found out that, well, her husband had died, and she's in a 4 or 5 month period where things have been up in upheaval. Another company came along, Revolve, and they bought the debt and got her back. It's called a modification loan. Got her back paying again, and then I took on the note, and everybody's happy. She's back paying again. And that's kind of the service one of the things that we do that I really love about the business is I'm not just going to say, oh, you're 90 days, 120 days late, give me the keys.
Right.
And we're going to put you on the street. We can be flexible. You just got to work with us. I've got one going on right now in Mississippi. She hasn't paid in a while, and she seems to answer when the attorneys call, and that's fine. Everybody's going through things right now, but we have the ability to be flexible. So at the same time, I can create wealth, help people along the way, and it really truly is a wonderful business.
And what you're essentially doing there, we have a mutual connection. I can't remember who it was, right? It was talking about just different investment philosophies, and in this particular environment, you want to buy debt. Mm-hmm. Right. And it's essentially what you're doing when you're buying a note is you're buying debt. Mm-hmm. Right.
Yes.
You said something just a moment ago around you wanted to make investments that you didn't have to worry about, essentially.
That's
right.
Yeah.
And as realtors, I think for the most part, when we think investing, I think anxiety just immediately kicks in. We think properties, we think hard assets, we think problems, we think what could go wrong. Just give us your best ideology on how is note investing so much more hands off, you can sleep at night, and it fits your investment goals from a cash flow standpoint. What is it about note investing that makes you way more comfortable around, I can be more hands off and I don't have to manage this?
Sure. Well, I think the simplest thing is to start with is I was trained properly.
Yeah.
All right. There are plenty of people out there who say, hey, go do this, do that, and buying notes, and you do it wrong, get yourself in a lot of trouble, just like anything else. When I learned about note school, watching Eddie on another podcast, I said that's an ecosphere that I need to immerse myself in. Mm-hmm. But I recognize I can't do this myself. Yeah. Just like you can't go out to sell houses without getting a license and being
sure.
And it helps to be part of a team that gives you support. That's what I have with these folks. But I've been taught how to handle the what can go wrong. I'm an airline pilot by trade. My checklists are what happens if things go wrong.
Right.
With notes, there's a very defined process of what happens when things go wrong. And it's probably a little too deep for this conversation today, but let me say that there's 3 or 4 steps we go through, but when you've bought the note properly and you have a good equity position, the chances of you losing are very slim, probably none in my case in the ones that I have, because you're in an equitable position. And I think, Eddie, that makes note buying a little bit different now than it was maybe in 2008 because of the types of notes that we're seeing coming down the road.
Yeah, when we say we buy notes, we buy 2 types of notes, right? We buy notes that are paying every month, and that's what Tom has been primarily describing. And you'll buy a note, one of these 2 million, that aren't paying every month. And so you know that you are buying a loan that you're hoping that they sell the collateral, before it gets foreclosed on and you get paid off. Mm-hmm. You bought it at a discount, you get paid off at the full amount.
Right.
That's one strategy. And the other strategy is that you're just buying a note every month. The note that Tom described, where the lady, her husband died, that is called a reperforming note. And so there were millions of notes that got delinquent during the virus, and then they modified them, and now they're paying again. RPLs, reperforming loans. And so a lot of the assets that we source today are loans that look like that. And they aren't necessarily on giant houses. They may be on just, maybe they owe $100,000 and the house is worth $200,000. And they had something happen in their life. They maybe worked at a restaurant, or maybe they worked at a hotel. Mm-hmm. Something happened during the virus and they had a life interruption, and they're back paying again. And the typical pay history on those loans today is probably, a year and a half they've been paying. And so, what's the likelihood they're going to have more problems? Not very high. Yep. So those are really doing this a long time. The grade of those notes is really high. The availability of those type of notes is a normal occurrence today. So if looking over all different kind of notes and kind of risk profile of notes, there's a really good inventory of those kind of notes today. And that's why, the typical person that may have been thinking about buying a rental property goes, really, I can buy this note and I don't have the brain damage? And, I mean, and there's good times to buy rental properties, right? I don't mean that, or there's opportunities in any market condition to buy rentals. But I can tell you that you can buy a lot more notes with predictable cash flow in the market we're in. You wouldn't want rental properties wouldn't want to compare themselves to that because it's just timing.
Yeah, I mean, as somebody who owns rental properties, I could certainly resonate with that. The way that rental rates have completely tapered off and even shrank a little bit, right? And to really bring it back to just the basic bullet points, when you're note investing is about cash flow. And it sounds really fancy, as a syndicator, as a landlord. I could make a really compelling case, okay, for take your average rental property. I can make a really compelling case for the three different types of ROI, right? Your cash flow, your appreciation, and your principal pay down, right? Somebody else is paying your mortgage every month. Your mortgage is less than the rental rate, and that thing's going to appreciate at 5% every single year. On paper, it sounds like that is an airtight investment strategy. I might get an average 33% return on investment year over year with those three different types of returns. And things go wrong. Mm-hmm. All the time, things go wrong. And so with note investing, you are essentially, yes, you're trading out that appreciation. You're trading essentially that part, right? But going back to some Warren Buffett, stuff, I would think that most investors, seasoned investors, would trade pretty much every other type of return for better cash flow every single day. Mm-hmm. If you can create cash flow, you can create wealth much faster. Wow.
Velocity of money.
Velocity of money.
Well, I mean, think about it like this. You have a rent property and you gross a rent payment, but then all of a sudden you have expenses. And those are seeming like they've been going up a little bit, right? So think in terms of you own a note. What's your expenses? $20 to a servicer?
Servicing.
Okay. And then you collect the rest of that money. So while you may not get appreciation, you get almost mathematically every time at least double the cash flow. So would you rather have cash flow? Or, so if we could time every market to hit appreciation the way we hit it in the last 3 years, we'd be a genius. But this is my 43rd year in this business, and I can tell you something, anybody that acts like that's normal is totally kidding themselves.
Yeah.
That's unrealistic. So people like notes, and here's the other thing about it. My risk in notes goes down. Because as that customer is paying me back, they owe me more and more less money.
Yeah.
So my riskiest day to own the note is the day I buy it. Mm-hmm. And then 2 years later, they've gained some appreciation. And 2 years after that, they've gained more. So think about it. As life goes on, then my risk evaporates because I'm getting paid back.
I guess, that's true. I never really thought about that. You would only capture that appreciation if the note didn't perform and you actually had to take the property, but that does hedge your risk.
Yeah.
The longer they pay, that is your principal pay down, and then you hope to never realize the appreciation because you don't actually have to foreclose on the property or anything. But if for some reason that did happen, hopefully that home is worth more. So
right.
the appreciation acts as a hedge.
Well, and you can look at that. Every payment that comes in as lowers your basis. The other thing is when people say, "Well, look at that appreciation and all that." First of all, you have to cash out your assets.
You got to trade the cash flow to get the appreciation.
I look at it as amortization is our appreciation because I've got a note, and especially in the first few years of it, the most valuable, the interest keeps coming to me. But at the end of the year, they pretty much, you've seen it when you look at your rental statement, you still owe almost as much as you did. Where'd all that interest go to? You look at the closing statement, I look at the box at the bottom of the total interest paid, and I said, yeah, that's going into my pocket. Mm-hmm. But the other thing is, since we buy at a discount, the chances of these loans going to term is pretty slim. I think it's like 7 to 10 years is the average time it's cashed out. Mm-hmm. So when that buyer goes and sells the property or refinances, I get a chunk of change at the end as well. So and then we've got the velocity of money that all comes back, and I'm able to reinvest that much more quickly. It's very predictable. I can sit here and know within a penny as long as everybody's paying what I'm going to get, and that money's sitting there so I can go ahead and reinvest it in more notes and ladder them up as well at the same time.
Well, you don't have to wait till the end to get paid. And
That's
if you
true.
run the math, Tom, let's say that you invested $100,000 for a note. Over, 15 years, you're going to get back $250,000.
Right.
Right?
Right.
That's a pretty handsome return, getting paid back incrementally, not at the end,
Right.
but incrementally. And that's why a lot of people like this. People, we measure our audience all the time in Note School, like what people like, what people want, what people are saying. And I'm not saying necessarily everybody in this audience, but think about a lot of people, like they're working 2 jobs. Right, they're working harder, but they're not netting more life. In fact, they're having the life sucked out of them because of expenses and stuff like that. Yeah. So people are looking at that and saying, "Oh, and what does that do for their wealth building and their retirement?" Right? It's not helping them. In other words, they're waking up and finding out they don't have money to put in their retirement because they have such a struggle with survival. So people are looking at things today to say, what could I do today, invest in today that could produce cash flow, that could produce wealth, could produce legacy for my family, but not have to go, have that life suck it out of me life factor. And once again, the timing of this market is everything. I wouldn't have come on your show 2 years ago and had any argument about rentals. That would be foolish, right? That was at the time, that was a really good model, and a lot of people, your audience, took advantage of it. It's better to do an average thing in perfect timing than the perfect thing in average timing.
Agreed, 100%.
You get what I'm saying?
I could not agree more, and that is why, hindsight is always 20/20, but the opposite is also true. There are a lot of people that look like geniuses up until now because they were doing average things in perfect timing, but now those average things are still average, and the timing is not good anymore.
Yeah, and it's fun. I mean, I've lived through a lot of cycles, and I've lived through times in the market that it wasn't great to us, and we had to shift and move and stuff. The fun part is I get to go do what is our core competency today that we've been doing for most of my career. And I get to all these new people that I get to teach, and and they're like, "Oh my gosh!" And one of the things, and your dad Tom knows as well, right? We've become very good at financial modeling. And so people say, how does that work? How do you investing in a note do financial modeling other than figuring out what to pay for the note and what I'm going to get back? Well, here's what you could do. You could buy a 20-year note, Brian. You could turn around and take one of your clients that you ever have any friends or family or people that that you go to church with or school, with their parents and all that stuff, the parent of the kids. And they're all saying, "Hey, Brian, when you get in one of those deals and you need a partner, let me know." Have you ever been solicited about that?
Oh, yeah. As a realtor, we call it our database. It's kind of the lifeblood of our business.
All right. So you call one of those people and you turn around and you take a self-directed retirement account and you fund $100,000 and you buy that 20-year note. And let's just say, for easy conversation purposes, you're going to get $1,000 a month. Okay, you turn around and sell 10 years of that note. Okay, and you sell that for, let's just say, in the high 90s. You paid $100. You sell the first 10 years for, call it $98,000.
Okay,
you've recouped $98,000 of your $100,000 investment. How much money do you have invested to own the back half of that note?
so $2,000 for the last 10 years?
$2,000 gets you 10, and this is called a partial, and this is a technique that we've really perfected. And people say, that's magic math, and I'm like, no, it's just math that you didn't know. It is magic if you don't know it.
Okay, we got to drill down deeper on this. This is okay. Like I'm 5 again. Okay. So you're selling the first 10 years.
Yeah.
So what does my cash flow position look like for the first 10 years? Do I get any?
You sold it.
Okay, so I sold it.
So
now I only have
that's a
invested.
wealth growing strategy. That's not a cash flow strategy.
Right.
So you may not do that on every deal you buy, but let me tell you something. You got those kids, take a Coverdale educational account.
Okay.
And do that strategy and take one note that would pay for 2 years of your kid's college.
Right.
No kidding.
Mm-hmm. Really. And so if you diversify, right? You can diversify and you can mix your bag a little bit between present cash flow and future cash flow. And I'm sure this where the financial modeling aspect comes in. You could essentially predict your wealth building strategy up front for the next 20 years.
Well, and Brian, to tie it to the example you're showing before about rentals and how I got to hang out for that appreciation. Okay, so what if you could just take $2,000 and say, hey, I'll put in $2,000 now, and then 20 years from now, I'll sell that rental house for $100,000.
Right.
That's basically because you've kept the back end.
Right.
So your back end has value.
Right.
But it's an incredible leverage technique. Yeah.
And at the end of the show, we're gonna give something so people can kind of see a little class. We'll have a couple hour little class and actually go through step by step and show the math and show so it's not. I don't want to make it mystical.
Sure.
Right now, we're just talking about what's possible, not all the mechanics.
Sure.
Of how you do it, but we're saying what's possible, and people will come to me all the time and they say, Eddie, you talk about having investable capital, and I do have investable capital. I have 300,000, but I'm not Tom, and I can't go own 20 notes. And I'm like, oh yes, you can.
Yeah.
Right. And so, but once again, they don't know what's possible, and we're simply teaching people. You know why I love realtors? Because realtors are problem solvers. They're fun to teach because they're problem solvers, and they're not scared of real estate. Right. They already know the collateral. And I've said this. I've spoken a lot over many years, right? And I've said this from audiences from Miami to Seattle and everywhere in between. And that is, would you rather be a landlord or the bank?
It's a pretty simple concept. I would rather be the bank every time.
Well, and so that's essentially all that we're doing.
Right.
We're just showing people how to be the bank.
Yep.
Right?
Well, and what I love about note investing and note school specifically is it feels to me like the bridge between education and reality is closer in this investment strategy than just about any other, right? Like I take the landlord, just single family rentals for example, and syndications as a big one. I'm an apartment syndicator as well, and the getting into those spaces, and maybe I think this is really why this is the investment strategy that realtors need to know, because they have access to the deals and they have access to the mindset of being a problem solver. But when it comes to investing as a realtor, when I bought my first rental property, it took such a mental leap for me, because I was transitioning from I am basically involved in this deal for 30 days and I get a paycheck at the end, to all of a sudden I own all of the problems of this asset should they arise. Like the day that you close on that rental property, you feel ahead of time like it's going to be the greatest day ever. And then you sign the papers and you're like, oh shit. Like I hope that everything I learned on Bigger Pockets, it just works out that way. I just hope it works out that way, right? And, I say that's only magnified by about 1,000 when you're closing on an apartment complex worth millions of dollars, right? You can do everything right in your underwriting. You can do everything right. But I will tell you, being a syndicator, I believe we're very good at what we do. But it is a job. It is a full-time job. The second that something goes wrong, it doesn't kill the deal. But if you don't do something about it, it'll kill the deal. Like you are now, especially as a syndication operator, you are now in the asset management business. You have given yourself another job. And the returns to your investors and to yourself can be phenomenal. But it is also not something where you can sort of just You can go to as many classes as you want. You can listen to as many podcasts as you want. You can seek as much mentorship as you want, right? But the first time a tenant shows up and has a signed lease for 4 units of your apartment complex that you didn't know about,
Yeah, I remember that.
that your seller
Yeah.
signed with, or that signed last year without you knowing, and
Yeah.
those units are occupied by someone else, and now you've got to solve that problem in the middle of the night.
Yep.
You're calling in a lot of effing favors to figure out what the heck to
Right.
do.
Right.
And you've got other people's money on the line. So
That's a big thing.
You've
Yeah.
you got to figure it out. And
Yeah.
if you are diligent enough, resourceful enough, intuitive enough, and hardworking enough, you'll figure it out. You'll figure it out. But it doesn't mirror the education doesn't mirror reality all that closely. So much of learning to be a great investor when it comes to hard assets is just experiencing it. There are very few, I would venture to guess to say there are 0 investors that are highly successful in single family rentals, multifamily, commercial, all that type of stuff, that look back on their life 20 years and you ask them, hey, what's your craziest story? They're like, I don't really have any because I listened to a lot of podcasts and read a lot of books and it basically just lined up with exactly what it said in there. There's always there's always stuff they learned on the fly.
Right.
But with note investing, it can be, it's mathematical, and the education, I think, mirrors reality a lot more closely. You can go into note investing. If you go somewhere like Note School, where you've been through it all in 40 years, you can make investments that provide you cash flow, and you're probably not having to do mental gymnastics all day, every day to figure out how to overcome problems that came up.
Well, people ask us all the time, because a lot of times, the guru business, you have somebody with, truthfully, if you really vetted it, limited experience, or maybe they did it 10 years ago, but they don't really do it today. And I think we have vast experience as of recent. I mean, we've traded 6,000 or 8,000 notes just in the last few years, so we're not like out of the game, right? This is the retirement strategy, Brian, that I would teach you for your family is the exact retirement strategy that my wife and I have done, and my kids, slightly younger than you, that we teach them to do, right? If I could show you how to go take $2,000 and turn it into $1,000 a month for 10 straight years, and then you could do it for your retirement account, even do it where it was a Roth and never pay tax on it.
Right.
Or what about a Coverdell educational account and you could do it for your kids? Like all of these things. See, people think legacy starts out with wealth. And I say a wealth of what? Sometimes it's a wealth of cash, and sometimes a wealth of knowledge and creativity can build legacy without having to start out with the millions of dollars on the table to start with.
Yeah, 100%.
Well, and the other thing is we talk about retirement and all that. Retirement means different things to different people. When I say retirement, I have a hard cutoff at 65 because that's when the government mandates I'm done sitting at the controls.
Yeah.
But for somebody like you who's, retirement could be 40 years old and you're done with everything. You walk away and you and your wife travel the world and live the lifestyle you want. That's retirement. Yeah. So this doesn't have to be an old person's thing. There are tools. On my podcast, I interviewed Derek Long from Quest Trust Company.
Sure.
We had a whole episode talking about the different leveraging strategies using qualified funds, Roths, things like that. But there are tools that are available to folks of just about any age. And so these are things you can do at a younger age so that you don't wait till you're 62 and find out about notes and wish I'd known about this 30 years ago. I mean, Eddie, you tell a story about your dad and how he learned in a later age,
Yeah, so my dad was a realtor. And so my dad got started with us. I had gotten in the business. My father-in-law and his partner really taught me the business. Martha and I had married and moved out here to Dallas-Fort Worth and so forth and so on. And so then my dad became very intrigued with it. My dad started with us. And by the way, it's one of those things where you don't record every single thing. So I remember he was 68. May have been 67 or whatever, but call him 68. And the truth of the matter is, my dad didn't have enough money to retire.
Like most realtors.
And he was very worried about it. And I can say within about 5 years of doing notes, my dad couldn't spend his retirement.
Wow.
And so for me, this isn't about just that's just not some arbitrary student. I saw notes change my dad's life. My dad told me, my dad did the note business up until his early 80s and collected notes up until he passed away. And my mother then collected notes and so forth and so on. But my dad said to me, it must have been 10,000 times, son, I've loved this more than anything I've ever done. Yeah. Well, I didn't invent the note business, but I got to show it to him. Yeah.
That's pretty amazing. And that's exactly, I mean, that is the bucket that most realtors fall into, unfortunately, right?
Right.
And so I want to circle back to that, but
sure.
Go ahead.
Well, and that's another attraction when we talked about what attracted me to what Eddie offers and the ecosphere at Note School is that you start to get to our age and it's kind of like it's talking about leaving legacy, and Eddie's had a head start on putting his together better than I have. But what kind of legacy do you want to leave your family? What kind of business do you want to leave your family? Do I want to leave them a handful of rentals where everybody's tearing everything apart, or leaving the door open when they have a Airbnb wedding party and you get a call the next day from the cleaners that there's bugs all over it? Is that the kind of business you want to leave your family? Or something that's pretty much on autopilot? And that's kind of the way I look at my note business. Is I've got a set of instructions like, hey, here's all the notes, here's where they come in, and if I'm not here, you can manage that. And that's something that can grow over time. It's a very easy business, very easy portfolio of wealth to transfer on to my family and to the grandkids. It's something that I don't worry at night that they're going to have to manage, Section 8 housing and all this other stuff. It just makes me sleep at night.
Well, if you look at it even through a different perspective, because if we're talking to the 35-year-old realtor out there, I think intellectually you understand, I don't want to be 65 and have no retirement plan, but it feels like it's a long way away.
Right.
So if we change the verbiage to not even, legacy and retirement, but how about, work by choice, right? Because for most entrepreneurs, retirement is almost not an option anyway, because that just leads to boredom, which leads to tinkering, which leads to you all of a sudden being back in the business, right? So I think the idea of working by choice is so much more attractive. And if you are talking about building a life where you can work by choice, then cash flow prevails above all else, right? A lot of realtors' businesses have changed over the last 12 months. And not for the better, unfortunately, right?
Right.
And so a large percentage of those realtors, that bought investment properties or have been buying investment properties up until now, that's fantastic. They have wealth on paper. I can't tell you how many realtors I know that are wealthy on paper. But if their real estate business went away today, which for a lot of realtors, that business has significantly reduced in 2023, they can't live off of their paper wealth because they don't have enough cash flow. Now, if they hold on to those assets for another 15, 20 years, they've got a hell of a retirement plan. They cash in all their chips, they ride on it in the sunset, everything is good. But what about until then? Right.
Well, it's a diversification. I wanted to show you this. This is literally a text that I got yesterday, and that is from a guy that started out as a real estate broker that started with us.
Is he in Venice?
Yes.
Whoa. I won't show it on the screen because it's got his name on it.
Yeah.
But it is a picture from a balcony in Italy overlooking a little gondola on the canal in Venice, and it said, "This is what the note business did for me." I love that.
It's a true story.
That's incredible.
He's an old REO agent.
Oh, really?
He got started with us in the REO world, but did traditional real estate brokerage.
Yeah.
And it's not that he stopped doing that. I get that kind of text pretty often.
Yeah, I bet.
Right? And it's cool to say. And I want to be clear, I'm not trying to take anybody out of what you're doing every day for your day job.
Sure.
My dad was a realtor. Keith, the guy that sent me that text yesterday, was a realtor, or you're a realtor. Like, I'm not trying to take anybody out of that. But what if you could add something to it that did not have a life suck associated with it, and that could counterbalance the market and the timing of the market? Everybody knows that when there's something that goes bad, there's also something else that goes good. Mm-hmm. But people say, well, what is that? Right? Well, guess what? When banks are struggling and interest rates are high, and all of these market variables not good, what business always has thrived?
Yeah.
And that's called the discount note business. Now, I'm not saying discount notes has always been amazing, the same level of being amazing for 40 straight years.
Sure.
I'm just saying the runway in front of us, see, like that pilot reference there.
Love it. Yep. Yep.
The runway in front of us for notes based on the variables and all the banking stuff that we're seeing in front of us. This bank thing is, it's not over.
It's not over. You know, we talked about this before the show, and we can die. I mean, I could have these conversations all day. I think a good question to really harp on now is why is note investing? I mean, you're very bullish on note investing in general, but why now? I think more than ever before.
Inventory.
Yeah.
So when banks, all these reperforming loans, all these seller finance notes, more people seller financing. Why? Because they're seller financing because banks don't have affordable rates.
Right.
All of these non-performing notes. So when we add up all of everything that's causing distress in the market is adding to the pile of notes that can be sold at a discount.
Right.
And that's just a market condition. People say, "Oh, I don't know if you can buy a note at a discount." I don't know. I've only bought 50,000. I'm still kind of running the test, but I mean, it's going okay.
It's still in beta mode. We don't know for sure.
Yeah.
So I mean, and that is the long and short of it. Where we can talk about the trillions of dollars in debt in the commercial space coming due. We can talk about the cracks in the multifamily space that I think if you're a good operator, you can capitalize on. But the long and short of it is the debt crisis, the banking crisis, and the probably the credit crunch is not over.
Right.
And all of those signs point to note investing at a discount is going to be bountiful.
Well, it is. If I took literally 2 years ago, about when your dad started, and we're connected, so we've always got access to inventory. But when your dad started with us a couple of years ago, let's just say that the note level of inventory was a 2. It wasn't good. The note level inventory today, I would say, is a 6.5 or a 7.
Yeah.
And I think we're headed for an 8.5. Now, listen, we're not going to have the number of non-performing notes that we had after 2008. But by the way, we're buying delinquent mortgages in a residential market that hasn't got this gigantic crash in front of it.
Right.
So it's a lot easier to underwrite. It's easier to know that you're making a better investment. And what we didn't have that then, which we have this time, is we have all of these performing notes that are sold at a discount. We didn't see a lot of performing notes sold after 2008.
I guess that's true. So you feel like in today's market where you don't have this basically adjustable rate time bomb like you had in the Great Recession, that you're going to have way more discounted performing notes than you had back then, because I mean people are still able to pay their mortgages.
Well,
for
they
the most
modified
part.
Millions of loans.
That's true.
I mean, so you can kind of do the math. And you're saying, well, but the banks aren't going to sell those loans. Not when they're trying to clean their balance sheet up.
That's the thing. And I think people don't give enough credence to that ideology. Banks don't want to take your assets back.
Nope.
No.
They'll never recapitalize, or they'll never regain. It's expensive as well. You talk about building out, the great financial crisis is a great example. Banks did not do well that had a bunch of REO on their balance sheet, not because, and even the ones that did foreclose, they didn't want those homes back. A couple of reasons. One, it's expensive to just have to build out a whole REO department all of a sudden. You're talking manpower, you're talking all sorts of stuff. There's a lot of steps along the way. And two, unfortunately, for the most part, you're not getting the assets back in the condition that they were when they closed the first time.
Right.
And so those are organically worth less because they're not in the best condition either. And so when people look at what they believe is a looming crisis and go, everyone's going to lose their house, the bank's going to foreclose and all, that's not in the best interest of anybody.
Nope.
And that's where note investing fills a big gap because the bank doesn't want to take your home back.
Right.
Well, and once again, we're not predicting that there's some giant residential real estate crash, right? We're saying there may be a dent in the market, but not a canyon in the market, right? There may be a canyon in commercial real estate.
Yeah.
I mean, that's a horse of a different color, but we're buying loans that they're being discounted because of accounting scenarios or market conditions. The banks are cleaning up their books and they're making their clients sell notes, or they're selling discounted notes. Those are things that we know to be a truth. And quite honestly, it's not as dicey bidding on those loans today as it was after the old, in the old RTC days, which I was playing back in the 80s, right? Or in after 2008. I mean, that bidding process was not so simple, because you're looking at you have a mortgage against a piece of property, and it's a lot easier to calculate even in the future what that house is worth.
Sure.
Yeah.
Sure, 100%. And then that's going back to the advantages of note investing as opposed to other strategies. Is I believe there's just so much data. It's highly predictable in comparison to other investment strategies, I believe.
Well, and I think, Tom, you said this earlier, but I think it was Warren Buffett that said there's a time to invest in equity and a time to invest in debt. Mm-hmm. And when you invest in a property, you're investing in equity. When you invest in a note, you're investing in debt.
Right.
And he was talking about a pendulum shift in the market. I think that's who said that.
I think so.
Correct.
You've said that before.
So the point, though, is think about this. What is the tallest building in most every city?
It's usually a bank.
Oh, there must be something to
almost
this
always a
collective.
bank.
Take a drive through South Lake. Tell me how many Chick-fil-A's there are and how many banks there are.
Yeah.
I mean, when we moved, I think the last time I checked, there were 22 banks in the little city of South Lake. Come on, guys.
Yeah. Yeah.
So there is something to being a banker and collecting interest and collecting debt, right?
Oh yeah. I mean, unless you can own a Chick-fil-A, then do that.
Do that. That'll
But
be
I'm
my
pretty
side
sure you got to
hustle.
work there.
Well, and what I like about this environment, and like what Eddie's talked about, is the money I've invested, the equity that I own as a lender is much more than I've invested. So if every one of my notes defaulted, it wouldn't be good for the borrower. Actually, might be a good day for me because the return on my money skyrockets and I go ahead and reinvest it. I don't want that to happen, but that's my backstop.
Right.
Is that you always look, as a pilot, what's the worst that could happen? Everybody stops paying. Well, there's a very defined process that we go through, and we try to work with the borrower to get them back paying. That's what we want. But if they don't, they can't, circumstances come along, we take the property back. We can get it back on the market to another deserving buyer and repeat the whole process again. It's very stress-free, and it's a whole different paradigm. But I have a very equitable position, so I'm always looking at like what's the worst that could happen. Yeah. And I know that I think you told me once that about 40% of the highest level members of Note School are realtors.
Mm-hmm. They are.
And I know you're speaking to a lot of realtors today. Obviously, you've got this big audience. I know, and you talked at KW Wealth and Brett Tanner's group, the high-level folks there, and a lot of people have been interested in joining Note School. And so if you wouldn't mind, we're probably getting to the time where we need to wrap up a little bit, but how does Note School bridge that gap? How do we get our time back by using Note School? You're obviously going to dive into this when you talk about the 2-hour masterclass, but what does Note School do for the realtors as far as getting their time back, getting them into the game quickly? And you're not just an educational facility, but you're also a provider of inventory and a full-service shop that basically, I mean, you're my back office. So I think people would appreciate all that you guys do. So, and how you differentiate yourself from other educators.
Well, we met with our highest end students. Tom, your dad being one of them, right? And we said, what is the one thing that we could do for you? What one thing? And they said, compression of time. Like if you could compress our time.
Yeah.
The time to find a deal and have the connections to go find a deal. The time to underwrite a deal and the 200,000 hours that we may possess in looking at deals we don't have yet.
Right.
So give us a compression of time. And so we developed this very clever name done for you, right?
Whoa.
A lot of think tank work.
Yeah,
on that one.
100%. Hope you didn't break the bank on that focus group.
Yeah, but that's the idea. Is we developed a done for you process for our members, and it doesn't mean you can do it without education, because it's hard for us to help people when they have no idea. I think in terms of you're trying to help somebody buy a rental property, and they're wanting you to help them do a lot of things, but yet they don't know enough to even know what it is you're doing or
We're
why
not
you're doing it.
speaking the same language.
Right. So we got to get someone on the same page. But when we could do that, and we have really got that fully engaged as we do today, we changed the game for our students. Our success rate went exponentially up, our satisfaction rate of our students. I'm 63 years old, and I do this for money. I don't want to kid anybody.
Yeah.
But I don't just do it for money. I do it for impact. And I started realizing this is the highest way I can have an impact. Yeah. And as Tom said, probably 40% of our Note School members are realtors.
Yeah.
I mean, so that's a pretty targeted audience.
It's substantial. Why do you think, obviously just being in the real estate space, but what is it that has become, for your students that are building their wealth and performing at a high level, what has it been that your feedback has been about why this appeals to real estate professionals so much specifically?
Note School is a home for burnout landlords.
Yeah. Because so many realtors have that experience.
They either have them or they know them.
Or they know them, yeah.
They've
or they
sold
don't
enough
be
properties
one.
to them, and they've seen the horror stories.
And so that's what we really are is, and so, and realtors are comfortable with real estate, and realtors just are, you like we've had a fun time talking today, you kind of have to have an entrepreneur spirit to think about this, because we talked about some kind of entrepreneurial strategies within the partial and leveraging and stuff. And realtors have that spirit. So it's fun to go teach people that kind of have that mindset. They're not scared to learn.
Sure.
And once they understand it, they're not scared to act on it.
I think that's like I said before, the education lines up with reality in the note space. I think more than any other investment persuasion in real estate, it really does.
Well, and what Eddie brings to the table as well with his staff is, you can go to these gurus and talk about, you can have a 3-day class, down at the hotel about getting into rentals and everything, and then they turn you loose on Monday and start calling. Start trying to find your rentals, but you get your education here at Note School. They've got the inventory. It's what's your box? What do you want to build it in? And with all the assets that are coming through now, they're calling Eddie every day. Hey, we've got this tape. We've got this portfolio that we want to unload. And so if you want to build an inventory fairly quickly, the Done For You program is just amazing. We had
a hedge fund that called us with a spreadsheet 2 weeks ago, $65 million. Wow. And I'm not saying that happens every week, but it probably happens pretty often.
Sure. Mm-hmm. And I want to just harp on that just for a moment before we wrap it up. You hit the nail on the head. The biggest, that's also realtors in their own businesses just selling houses, by the way, right? Mm-hmm. We do, I don't know any other industry that has a bigger concentration component of coaching and training than the real estate sales business. You almost have 2 full-time jobs as a real estate professional. That is selling real estate and learning how to sell real estate better. The coaching and training is just endless. And the biggest gap has always been, what do you do with the knowledge? You still have to go out and lead generate. And there's one thing that realtors need to do more that they don't want to do more of, and that is lead generate. And so when those same realtors go to a great investment class or seminar, they get all hopped up, they write down their goals, they've got all the information, and then the next day, they've got to do something with it. And it normally involves picking up the phone and talking to somebody they don't know. Right. And that feels like lead generation. It feels like work. It feels like the same thing they're already creating avoidance around.
Yep.
The note business, especially through Note School, it's not a lead generation based investment strategy.
Right.
You have the inventory. It's a
Right.
decision strategy. You have to make the right decisions, but you're not cold calling to find these deals.
Well, we have a 20-plus-year-old training company. So in the early days, we used to have to we'd teach people how to go find notes and go find them.
Sure.
But we figured out, if you have a heart for your students, and I believe we do, if you have a heart for your students, you are trying to help them solve a problem, right? And problem is time. Yeah. They want their time back, and they want less aggravation. Yeah. They work really hard at being a realtor. They don't want to go learn a part-time business that makes that worse.
Yeah, I couldn't agree more. And knowing you for a while now, obviously, I can attest just what a heart you do have for your students, and what an incredible organization and opportunity to help others build legacy wealth and truly realize that work by choice or don't work strategy. I think more so than anybody else in investment real estate. So it's been incredible to see what you've built at Note School.
Thank you.
Yeah. So where can everybody find Eddie Note School? How can I get plugged in? I'm excited. I'm a realtor. I'm listening to the best podcast on earth. What are my next steps?
Well, the good news is you don't have to buy a plane ticket.
Love it.
We're going to have a virtual 2-hour class. This is a good class that combines tactical, practical steps. We're going to use PowerPoint and step through slides and show you these processes, and it's going to really fill in a lot of gaps as the mechanics. And then we're going to probably equally spend time and answer questions. We're going to listen to the audience. We're going to answer questions of what is it that's on your mind. And we're not going to filter the questions. If people have tough questions, we're going to answer those. If they have a layup question, we'll answer that. Mm-hmm. But it's going to help people relate to it. And I think once after a couple of hours, people get a sense, just like when Tom went through identically the same process. At that point, they get to say, I like this, I'm interested, or I don't like it. Most people like it, but not everybody does. And so they get to make a choice. And 2-hour commitment is a pretty easy way to go do that. And so we have a master class. I teach this with a guy that's our chief marketing officer who has a real heart for understanding what people are thinking. Yeah. And so he does a good job, I think, with me and just doing it. We'll have fun together. It's a live virtual event.
Love it.
And
I think since we're sitting here talking this podcast, we can say that your chief marketing officer is also a realtor with EXP.
Oh,
yeah.
There we go.
Yep, but he knows all about notes.
There we go.
Yeah.
So. I forgot that.
Yeah. This is the place to get it all out there.
At this point, he might have too. Maybe he doesn't need to anymore.
That's true. That's true. And I pushed the master class on my podcast and everything, and I'm here today putting myself out there saying these guys have changed the trajectory of my retirement. As my son, what it's done for us. But we've also dropped money and time and wasted efforts with the other gurus out there, the other programs that are out there, and they're in just as much for themselves as they are their students, and I don't feel that here. What I've gotten into Note School besides creating a retirement where I'm there now. I can walk away from my job. Yeah. I can go to Venice. I can go to Ireland for 10 days like I did. And you know what? I told Eddie, I said, none of my borrowers call me.
Yeah.
They don't call me that their air conditioning went out or they're not,
oh, yeah.
I don't have to worry about it. It's worry-free cash flow. So they've done that for me. But what I also joined is an ecosphere.
Yep.
It's a family. And you've met some of them, and we do business together, we socialize together, and it's far different from anything that I got in this to make a little bit of money. What I got out of it was so much more.
And just to I mean, man, I could talk about this for hours to harp on that and to make some of the connections, right? I believe note investing to be the most egoless investing strategy in real estate. Mm-hmm. And I mean that for so many reasons. One, just getting to know Eddie and his family and the entire Note School community has been incredible. Also, I just want to be very clear and transparent about this. As an investment strategy, note investing is not sexy. You don't really have much to post on social media. You know what I mean?
Here I am.
You just don't.
Here
right?
I am signing the allonge.
I know, and I just want people to be okay with that. You said this before the show. You're like, I get really bored with this investment strategy.
Yeah.
You're like, I got to find things to do with my day.
I got to go spend my money that I'm getting into the mailbox.
But here's what
I was
you
gonna
don't
say,
get.
I think the sexy part of it is you get to take pictures in Italy. So
Exactly.
That's true. There you go.
100%, right? But I mean, and I want people, realtors especially, to just understand that, because we all know the saying, especially in real estate circles, right? The best way to make money in real estate is to sell things to realtors. It's just true. Or real estate investors.
Yeah.
Your classes, you're selling hope, you're selling emotion, right? You're selling the sexiness. If you are not going to have a before and after of your flip in this investment strategy. Like, you are sacrificing the ability to go, I took this and made it look like this, right? I will also tell you, the thing that happens from here to here, I've experienced it, you've experienced it, it can go sideways real fast. I know for a fact, we all know people in these circles, I have seen homes that I passed on as a flip in somebody else's before and after, where I'm like, I know you lost $25,000 on that deal. You just made a $25,000 Facebook post. Are you out of your fucking mind? But you don't get that in note investing. It's actually, it can be boring, but be okay with that.
Here's what you do get. What you do get is to be a part of a process that gives somebody home ownership.
Yeah.
That's true. That is so true.
That is a truth.
Yep.
Yeah,
100%.
and especially these days, because of the lack of credit availability, the ability to give somebody a home on seller, a deserving buyer with a good down payment, who might, they don't have the perfect credit score, and we actually get to play matchmaker and get all that together. And that's another whole track on Note School we just don't have time for today, but you learn about it. There's so many tools. It's a business where we help people. Yeah. And in the end, we're rewarded very well for it over and over again.
100%. 100%. How can they find the masterclass? We put that in the show notes? Guys, I have a confession for you. This one is pre-taped, even though it looks live right now. So there's probably a link coming up, I'm sure, Jesse.
There should be a QR code at the back there. Oh, okay. Well, the class, Eddie, talk more about the class. I think you got some giveaways as well, and it's all for free.
Yeah. So one of the things that's really important about the master class is not just the 2-hour training, but we have workflow, charts and books and risk analysis information that we give people. So we give people a lot of stuff that is, don't just come for that.
Right.
But don't just come and think, I'm just going to get 2 hours worth of training. We're going to leave you behind. How would you like to have an Excel spreadsheet where you can run that math, where you buy the whole note and sell that partial?
I would love to, as an underwriting nerd, absolutely.
I got that.
Love it. Yep.
Okay,
It'll be one of the handouts you get as part of coming to the class.
Love it.
Yeah.
Love it.
It costs absolutely nothing.
I love that. Perfect.
And it's virtual. It's done like on a Wednesday at 11 o'clock.
Okay.
So, yeah, and so they want you to be live so you can ask questions.
Oh, yeah.
Yeah.
Love it.
For sure.
Perfect. We'll make sure that we've got all the links.
Come and lean in.
Yeah.
Like, literally, don't try to multitask. If what we spent the last hour talking about sounds like something you're interested in, it's worth leaning in and learning it. If you're trying to go do 6 other things, then you're going to miss what's possible.
Yeah. 100%. And we tend to do that with virtual classes. So make sure that you're present, you're aware, you're taking notes, and like Eddie said, you're leaning in, because this strategy really is it is right here and right now your way to start building that legacy wealth. And is it such a hedge against the market volatility that we experience in real estate all the time.
Well, it gives you a second chance too. You could be like me, where you've missed opportunities all along the way. I'm in my 60s, I've got cash sitting there in a retirement account. What do I do to put it to work? Well, this is the easiest and best way to put it to work. And I can't say it's pie in the sky. It's worked for me. I've hit my goals. I'm just kicking back and having fun with it now. I'm just going to keep growing it. Let's see how big we can make it.
Yeah. 100%. Yeah. We'll do a show from
Imagine your dad being aggressive, right?
I know, right? Of all people, I know. Right? Exactly. Oh, that's almost an inside joke, but if you know him, man, that is so funny. All right. Well, you know what's not funny? Mortgage Mike. Jesse,
wow.
I know. We don't need Nick for the show. My segues are way better, I think. Check out mmgloans.com, home of Michael DeBacker Mortgage Mike, the best lender in all of Texas and Oklahoma. Theron Smith over at Armadillo Home Warranty. Get that hard shell protection. Go to armadillo.1/tour. HomewardDFW.com for Homeward Property Management, your North Texas property management needs. And Tour Studios, TORE Studios.com for all your multimedia needs. Tom, Eddie, this seriously was a pleasure. I would love to do this again. We've got to have you back on. Seriously, check out Note School, noteschool.com as well, just to check out Note School. Just please check out the masterclass, immerse yourselves. I can't say enough good things about Eddie and Note School and this investment strategy in general. This is the type of education that I am telling you as somebody who has succeeded at a very, very high level in this business. This is the education and the investment strategy that you need to be looking at right now.
Mm-hmm. And there should be a QR code come up at the end. You can just get on your phone and get hooked up with Eddie.
Perfect. Awesome. All right, gentlemen. Thank you so much. Episode 20, whatever I said before. We'll catch you next time, guys. Thank you.
Hey, thank you for watching. We truly appreciate it. Checking out another episode of the only real estate podcast worth listening to. If you're watching this on YouTube, please go ahead, hit that share button, hit that like button, and hit the subscribe button. Right? We're dropping more stuff on YouTube constantly. If you're on iTunes, leave us a review, please. We're really, really focused on building up those reviews so we can get more searchable content on there. And if you're on Facebook, like everyone else is, go over and search the only real estate group worth being a part of. You're going to want to go join that group. I'm telling you right now, there's so much gold in there. So go join, share us on YouTube, and leave us that iTunes review. Please go do it right now. We'll see you on the next show.